the market is giving a lot of good dip buying opportunities. We're going to take a look at Bitcoin, the S&P 500, the NASDAQ, the Russell, the dollar, the bonds. We're going to take a look at Tesla and the rest of the market as a whole. All right, so without further ado, let's get started with the video. All right, let's start it off with Bitcoin. So this is the daily chart of Bitcoin. And once we get down to around 27,000 on Bitcoin, that's going to be a really, really solid dip buying opportunity, in my opinion. We could see that dip. We could see that. I was about to say Dipcoin. We can see that Bitcoin is trading very far outside the lower level of the Bollinger Bands here. And when that happens, it's a good chance that we get a retest within the Bollinger Bands. So if, in general, guys, in general, collectively, as you're watching this video, hope and pray that the market ends up opening very, very red tomorrow. If that ends up happening, it's going to be very, very easy to trade. We just have to buy the dip. If tomorrow morning, these piece of crap market makers somehow bring the market up 0.3, 0.2%, futures are green at the open, that just complicates things. So just pray that they just drop everything lower. Pray the more red we open overnight, the more vigorous we can basically lean into longs. All right, so that's basically my premise. So Bitcoin, 27K on Bitcoin is going to be a very good dip buying opportunity, in my opinion, for a nice little bounce. Because when we take a look at the rest of the cryptos, the altcoins are taking a hit, right? So Ethereum, huge hit, comfortably trading outside of the lower bands, and 100% we're going to open outside of the lower bands. Once this next candle, once this daily candle opens, it's going to open outside of the bands. So when that usually happens, in the short term, as you're watching this video, you can scalp Ethereum long for a retest back into the bands. That has a very, very good track record of happening. Link Marines are underwater as well, and freaking Litecoin does not see the light. Honestly, it's not doing too well. So all of these coins are doing terribly, and basically you can see that Litecoin is not even trading outside the Bollinger Band. So there's a lot more room to go on Litecoin, and yeah, so just in general, all of these coins are taking a huge hit. Bitcoin is taking a huge hit at 27K. If we end up getting that dramatically tomorrow, I'm going to go long BTO calls. All right, so we're going to go long on BTO heading into tomorrow. And yeah, that's basically my thought process for crypto. Hopefully it drops tomorrow. BTO is basically, you could play options on it, and it's the Bitcoin ETF. All right, so there's that for crypto. Let's take a look at the dollar and the overall market. All right, we're going to do this quick. Okay, so the dollar, very important to watch because the dollar has an inverse relationship to the market. If the dollar falls, then the market should be doing well. That means that the S&P should be doing well if the dollar falls. Okay, so the dollar clearly showing resistance here. What I want to see is the dollar really, really crack above this level of resistance. But for now, technically, we are showing resistance here on the dollar. As it shows resistance, this is good for the overall market. It is leading to a bounce with the dollar showing weakness here. Okay, so technically that is what's going on. What we really want to see is obviously like one more day of just screeching strength. That'd be fantastic. But for now, the dollar is showing weakness at this level of resistance. If the dollar, I'm going to say it again, if the dollar is showing resistance, then the overall market should be bouncing. Okay, so there's that for the dollar. The bonds are the next thing that we need to take a look at. And we can see that the bonds are in a large daily candle falling wedge. Falling wedges are very, very bullish patterns. Basically showing as it curls in between this falling wedge, it explodes to the upside. Okay, so the bonds are important because if the bonds and the NASDAQ have a more correlated relationship. So if the bonds are doing well, then the overall market is also going to do well. Okay, so that being said, really want to see the bonds make another low. To be honest, that'd be great. But right now, what we see is the bonds did make another low here today, and we're waking up. But I really want to see the bonds just take another dive. Just want to see it take another dive lower, one more dive to the downside, and that would be spectacular. So yeah, but overall, this is a bullish pattern. But I really want to see the bonds just fall lower. Okay. One can hope. All right, one can hope. But yeah, there's that for the bonds. Next, I want to take a look at what basically happened. One of the largest moves last year that ended up happening on the S&P, where we dropped that 17% over the course of a few weeks. I want to take a look at that, okay? All right, so first, I want to take a look at looking at the date and price range of this move, okay? So from the top here to the bottom here, took us 21 days to drop only 5%. Okay, so I want to preface it by showing this data that we see right now. All right, now I want to go back in history and I want to take a look at a much bigger drop recently that we had and compare it. All right, you guys are going to see why I'm doing that. Okay, so let's go back. Date and price range from the top all the way to the bottom. I mean, yeah, like it was basically 19%, but this move to the downside was just meant to really be a bear trap. But regardless, 58 days to drop 19%. Okay, so what I want to look at are what I most want to look at during this time right now are these periods where we bounce. Okay, and basically what happens and at what percentage did we bounce and what the percentage was of the gain afterward. Okay, so here we dropped about 4.6%, came to a major basically in a few days, in a week, right? So this was a much faster drop. Okay, so when you drop very quickly in a short amount of time, you get a much higher chance of a bounce. Okay, so what we just saw 5% in 21 days. This was 4.6% in 7 days. So obviously there would be a higher chance of a bounce. Okay, so we ended up bouncing about 2%. Cool. We ended up bouncing about 2%. All right. Then afterward, once we got down to about 10%, right? Once we got down to about 10% drop, how much did we bounce? From here, we ended up bouncing about 5.5%. Okay. Now, this, I don't consider it an opportunity to bounce, right? Because this was not really a good longing opportunity. It wasn't showing extreme weakness. It wasn't a good longing opportunity in my opinion. And yeah, it was too weak. And down here, it would just make more sense to go short at a level of resistance. But regardless, for the sake of whatever, right? We still got a bit of a bounce. Had we hit caught the bottom and had you have just gone long here, it was still a bounce. Okay, but regardless, it wasn't as good of a bounce. The real one, another really good one, was basically even if you bought it down here, there was still about a 4% bounce to the upside. Okay, so there are smaller bounces that happen over the course of the market dropping. And now the point that I'm trying to make is, where are we here on this current chart compared to where we were? All right, so we're getting very close to a first bounce. We could continue falling lower by all means. We saw Michael Burry short. We saw all of these hedge funds short. We see the overall market. We see a lot of big money is short. Guaranteed they're short. But where is it? Where are we going to bounce? And my thought process is, it all really depends on, I really hope I really, really, really hope tomorrow we end up opening red, man. I can't explain how much glee I'm gonna have if we open up red, because damn. Yeah, but regardless, my point is that there's a major, like, 432 to 433 area. If we can drop down to that level quickly, because there's always, in terms of speed, if you fall in a fast manner, you're going to get a big reactionary bounce. And what I want to see is a nice drop down to 432 to 433. If we get a bounce there, that would be much more ideal. But the main level of support is obviously going to be this zone right here. Okay, so this 434 down to 431, the prior lows of June 23rd. And these lows were basically the resistance levels from back up here. I just want it to drop. I want it to drop very, very quickly tomorrow. It's going to make everything so much easier. The SPY is not as overextended to the downside as the IWM. And you can still see the IWM opened inside of the Bollinger Bands today. So it still algorithmically had more room to fall to the downside, which is what they're doing, which is hilarious, because it opens inside and it closes outside, and then it opens inside and then it closes outside. And this is only due to the fact that the Bollinger Bands are in vomit mode. It's just vomiting down. So because the Bollinger Bands are vomiting down like this, there's more room to fall to the downside for the IWM, right? As we have clearly seen, before it becomes very overextended to the downside. So if tomorrow we end up opening even more red, it's just going to be such a really awesome dip buying opportunity. And oh my goodness, I just really, really want this to drop. Like, it's just going to make it so much easier. It's going to make everything easy, honestly. If we open up very, very red, if we open even if we open like 0.7%, if we open like, oh my god, 1% red, then tomorrow is going to be a really, really awesome. We're going to make a lot of money. This would just kill it, honestly. This would drop down to a major, major level of support down here. 1% would bring us down to 182. And 182 is correlated to the shorter term. This is perfect, because on the larger time frame, this is the larger scale 618% fib, and also the most recent move that we had, the 382% fib. So, oh my god, that would correlate perfectly, honestly. I'm excited. Honestly, I'm very, very excited. I just want it to drop. But regardless, if it's not going to drop, 182, 180, 182 is going to be a major, major level of support on the IWM. And that, regardless, is going to be a good level of support. People are going to try to buy the dips there. And the NASDAQ is not as overextended as we have seen in prior moves to the downside. All right, the NASDAQ was never one to really become very, very overextended to the downside. Even this entire move down, it still remained inside the Bollinger Bands. It never got extremely overextended to the downside, where we saw the IWM, we saw the SPY being very, very overextended in terms of the Bollinger Bands. The NASDAQ does not do that. So one of the reasons for that is because the NASDAQ stocks are just stronger, right? So obviously it's not going to be as overextended to the downside. And it is currently getting close to 356. So 354 to 356 is very, very important on the NASDAQ. Oh my god, man. And then we have to take a look at Tesla. So Tesla, if Tesla can open red again as well, if Tesla opens red, this would be a really these are setting up for really, really explosive moves to the upside, honestly. And if Tesla can drop down to even 10, 213, 215 tomorrow, I think it needs to really drop a bit lower intraday, and then we can bounce back up to 230, 235. That'd be really good, honestly. But it just needs to drop fast. And in general, right, for everything that we're looking at, we want to see everything drop fast. And another reason is because the VIX is getting very overextended. So if the VIX has another big move to the upside, it's going to be trading very far outside of the Bollinger Bands. And this would be a really good opportunity to go short the VIX, obviously, but to go long on the market. Because the VIX has an inverse relationship to the market. If the VIX is doing well, and if the VIX is basically skyrocketing, then the overall market is bad, right? And what we see here is basically almost every time we're trading very outside of the Bollinger Bands, we return inside. We return inside. We return inside. We end up returning inside. And these returning insides are basically longer term calls that we could be getting longer term calls on the overall market while the VIX and everything returns back inside. And I'm very excited. If I really hope, because this is all correlating pretty perfectly. The dollar is starting to show weakness as support, resistance, but just one more day of extreme weakness would definitely cause the market to bounce, because right now not enough people are bearish. I don't think enough people are bearish. I think too many people are comfortable trying to catch the bottom, and not enough retail is bearish right now. They need to drop it down one more time, bring it down to even 430. That is, I think, when the whole concept right now, zooming out, regardless of what level now that we drop down to, regardless of what level that we're going down to, you have to look at it in terms of market makers. Market makers, they have whatever, and all of the money combined, there's hundreds of billions of dollars. Cool. But they don't want to just use their money to bring the market up, okay? They want retail investors to try to go short, and then they want retail to pile in their money and continue to go short. Oh my God, hey, we're going down. Then it won't take the hundreds of billions of dollars, trillions of dollars that they have. It'll just take much less than that. And the retail investors will begin to be like, oh man, okay, this is definitely not going to work. And then they're going to become bullish as the market is rallying. So it's going to take less money from the market makers to bring the market up if they first make retail investors take the wrong trade. So not enough retail investors are bearish right now. There's still intelligent people among us that are trying to catch these dips in safe manners, but not enough people are bearish. There's still people calling for the bottom. We need more retail to become very bearish. Once that happens, maybe in another percentage or two, that'd be spectacular. And we can just look at what 2% would mean for the market. 1% would bring us down to around 432. Perfectly, basically on the dot. 2%. Wow. Oh my God. I want to, goodness gracious, just pray. Honestly, guys, now just pray that we have a big drop in the market in the next day. Monday, call it Black Friday, Bloody Monday, whatever the term, just pray that the market just drops. Because if it drops very quickly in a short amount of time, once enough people are bearish, make another leg down, that's when the market is going to rip to the upside. And we've seen that. We've seen that time and time again. We've seen it time and time again, guys. In the midst of it, it feels bad. It feels bearish. You gotta zoom out and realize this is what they do. They make something very, so I'm gonna use Tesla for an example again. Tesla, right? They make something look very, very overextended to the downside, make it look like it's about to bounce, make another low. What do they do after making that low again? They make another low. So very overextended, looks like it's going to bounce. What do? Make another low. What do they do again? Make another low, and then it's a pop. What happened with Nvidia? Made it look very overextended. Made it look very overextended. What do? Made another low. What did they do after that? Made another low, and that was the bottom, and it ripped. So I really want to see a repeat of this. I really, really, really am very amped up and excited to see this. And let's make another low. Just make another low. Honestly, just make it easy for us. Make it easy for everyone in the market. Make another low. Get everyone to be bearish. I hope more people become bearish, and I hope this drops even more dramatically. I want this to, oh my god, 205. If it drops to even 205, damn. Oof. We can get like 300. Honestly, if this drops to 200, now I'm just getting way too excited with this. But yeah, just keep your eye on IWM names as well. And one can hope. One can hope. But yeah, just watch for crypto. If you guys, by the time you guys are watching this video, watch for crypto bounce. And watch for 27K on Bitcoin. Alright. Hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. I'll be back to streaming tomorrow morning. And yeah, have a good one. Take care. Thank you.